All right, so basically, I noticed a few things. For my future videos, I'm going to try to sit closer to the microphone. They're long, so I can probably just move the mic closer. And hopefully this is going to allow the audio to be a bit more consistent in terms of my speaking. I watched my whole last video, so with this one, I wanted to go through pruning my watch list. As you would have seen, I'm now using the advanced decline line, and it's going to play a major role in my trading. I can basically guarantee it. Um, there was bias in the last video, and as I rewatched it, I really saw the bias in BW, where I thought BW wasn't 5 star, and I actually turned out to be right in my first analysis where I felt iffy. So I wanted to redo that immediately just so I can get the rep in and correct it. It's approaching my bedtime, or it's past it. It's 10 o'clock. So I'm going to, real quick, we're going to pretend we're looking for a short here. And I didn't research what was best and stuff, so we're going to do it again just to get the rep in. I mean, whew, if that breaks down, I think there's air, but it's not close. You know, AXTI looks, I think it looks very good. I thought Soxa looked very good. And one of the things I really liked that I did in some of my trades was I didn't, just because there was an SA, like a situational awareness signal, didn't mean I went and slammed trades. Unless they were like obvious, right? What I did instead was I started looking for stuff that broke down further after the SA signal. So we're going to look for that actually. So like, yeah, immediately, if I recall, there's nothing that I really would have taken. Like BE has bias, so I'm not even going to touch it for the sake of experiments. Or sorry, BW. But a lot of these built tight ranges that I felt like could have been taken. You know, if I had to choose one, it would be Marvel, because I think that's okay. But what I'm going to do is I'm going to give it one more candle. And obviously Marvel fucking goes lower, but we'll see. I think I have to just take Marvel here. At this point. You know, Fazli's not good. I could see Lunar being really good here. And I would rather be shorting Lunar with the chart like this than Marvel for some reason. I think Lunar's better. I'm gonna move it up. So it's gonna compete with Marvel. It's certainly weaker, right? Marvel, you know, here I thought it could follow through to the close. Now that it's at the close, I don't think there's a whole lot of profit in it. If you compare that to SOXS, should go to the close, like if it works. AXTI, you know, I I could see this going back down and failing here, but this is too big. Like this is a crazy. I don't know. It's not as good as what is it? The one I Lunar, I think it was. So I think the best one at this point was Lunar, and that's the one we're gonna trade. Oh, I'm nervous, but it did work. Yeah. Okay. So it's interesting. So what you're gonna see is like a lot of trading is based off of intuition, and intuition is less consistent when you're tired. When I paper traded this, 12 hours ago now, almost, like I paper traded this method at 12 a.m. or 12 p.m. this morning, because this is when I was coming up with it. I thought Lunar was the best open range break short, but then you see me when I'm recording it 6 hours later when I'm not very mentally alert, the results change. And I'm like, oh, is BW better? Blah blah blah. Like, I genuinely think this is like obviously has a lot more follow through potential than the other setups, and I can't explain it. Um, I wish I could find another one so you could understand. So a lot of the open range breaks looked like this recently, like in my last video and so far today. And they just run into the high of day and the close, basically. And they're going to fail at one of those points often. So they're a bit harder to trade. Whereas like a really good open range break will look like this. And you see like there's no resistance. There's technically the high of day, but like not really. You know, the real level is here and here. So there's the resistance is in this area, and then it builds a tight range, and the resistance becomes this area, and then it breaks out. So, you know, this is like what you're looking for, and this is kind of what Lunar did today on the short side. Um, the real level, like if you were just, you don't draw the level here, it's going to be like here. And you see like what the market is saying is that there's buying and selling between 27 and 27, like 27 and a quarter and 27 and a half. And that's where the resistance is. And then since it puts in a tight range and fails, there's epic follow through. And you know, once you really get through here, it's like very fast, but the time to catch it is in this 5 minute bar here. So yeah, that was really cool, and that's what I experienced. That's what I wanted to say. Now, because I've had a break, I want to go through the stocks that are the best selection. And so what I do is to guarantee consistency in my process, because a long process gives you opportunity to fatigue mentally. And you really want to remind yourself what you're looking for. So if you look at this stock here, this is Lunar, obviously, but I want to point out like what it looks like on its huge run, just so you understand. Couple of things. Huge moves, 9 million EPs, you know, breaks out of a flag. So the flag is visible. People will feel emotions and stuff because it's a flag, making it more in play. The moving averages are all stacked, and you don't even have to trade it on the breakout of the flag. You can wait till after this earnings event, see the volume pick up. So now you know the stock is very in play, and you can trade it every single day after for the next few months until it like falls below, say, the 50 convincingly, right? So you can trade the bounce here very easily, and then once it like comes back, you can start watching it again, and you can trade it on this day here. You can trade it on this day here, and all of these days are tradable setups until it like falls below the 20 again permanently, like here. You know, that's when it's over. So you're looking for stocks that are in this phase between this period and this one. And this is where you're going to get a lot of range and a lot more setups. So that's what we're looking for. So look at the volume of how it started. Look at the volume over here. Look at the volume over here. Look at the price. You see how it's maybe not taking out 2-year highs or anything, but it's up on the right-hand side of your screen. The price is above $10. Look at the movement. So 9 million EPs both times. Those are the dark red ones. Previous runner. And then at this point, I would say here is where it's at. After this move, you know it's a good trading stock for the long term because of how clean this is. So I don't know what the market cap was at this time. Just about 1.5 billion, we'll say. Funds will, this is like, okay, a fund is trading this. This is what's going on, right? Because it's up 5 days in a row. Like no random stock does that if it's above $5 and $1 billion market cap. And so that's kind of That's the lesson. And then, if you want to be short, you can obviously extend the time period, and once it falls below the 200, it dies for sure. But I think the easiest shorts were like this period. I don't know if this was easy to do, basically. So we're looking for that period. So you can tell, like here, by this day, it's in play, right? And lots of trades. So Lunar is like a very good stock right now. Um, it has a lot of theme, and that's with our pruning of the weekly focus list. That's what we're looking for. It needs to be like aggressively moving, and if you look, the volume needs to look like this. Ideally, more so aggressive. So that's what we're gonna look for. So like perfect, right? This is really good, very good. This is like not as good objectively. It's like one of the lower tier things, but you know, um, you have this context where it's a $200 stock, so they move differently and they're a bit more consistent. Excuse me. So there's that going for it. But with where I'm at with 33 names on my list, I actually don't need it on my watch list. So even though it's like a really nice stock to trade, I have 33 right now. I got to admit, I kind of see the same problem with BW. The market cap's great, the price is great. Um, but the volume is good. Cypher looks so good. I have to keep it on. It's acting right, I think. And this one looks good, but I'd rather be in Cypher so I can remove it. Core, again, the volume isn't crazy, and like this price action is not as good as for example Cypher, so I can remove it with like very low guilt because I have 33 other setups. If I had 5 setups, of course I would be keeping these, or 5 names, but look at the same thing. So it's high priced, moving well, but there's better stuff. There's really good movement, really good movement. The volume is really good, and the market cap isn't crazy. And it's also high price, so it's got a lot going for it. The volume here is very good. The movement is very aggressive, and it could like do something like that eventually. So I think it's a very good name to trade. It had an EP. It has growing revenue. We could add the revenue down here. It should be here. So like fundamentally, Dawkin, same thing. Cypher. This is one outlier quarter, but the trend is increasing. BW is growing. Like all of these have generally good fundamentals or insane price actions. So yeah, Fazli was good. Hut, perfect, right? Market cap 8.5. The movement is very good. Coming out of a range. The volume isn't perfect at all, I would say. The volume is obviously offset, but Hut makes big moves. Coming out of a flag, like very in play. Intel, I know they had EP-like news. I'm just gonna remember Stockby on this one. I didn't trust it, but look, 1.5 billion shares. So if we compare that to freaking Intel, the volume is very good, and it's a high price name, so it's got to be watched for a bit. But I think you can remove it on the basis that there's Soxel, so I'm okay removing it. Iron, like freaking great, Really good. We can remove stuff where there's no visible 9 million EPs as well. So it, I'll keep Labu obviously, but uh, maybe I won't. It's not, the individual names will be better. Light. See, it's very good. It's in a range, but imagine it breaks out, The volume is there. But see, by adding this is like very good volume. So LPTH is one of the best. This is like very good. The volume is quite good. The price action's good. Perfect. Very good long term. Very good price action. Very good. Very good. This is quite good. This is annoying. We'll keep it, and then we're going to go through and reduce them by 9 million EP. I need EPs on the thing. And those are the red candles. They're just, it's code, but you'll see it's a trait of names that move better. They have quite a few big red candles. So plug, this looks problematic, I would say. I don't think it's good at all. So I can remove it. And this is based on volume and price action. So I had this for thematic reasons, and I don't know. I'm gonna keep it. But it's not easy. Yeah, look at the volume, very good. Great volume pattern, good price action. Perfect. It's an ETF, so it's a bit harder to trade, but that's fine. Get rid of its antithesis. Good volume pattern. I'd want the volume to be a bit better. It's a really nice flag breakout. But like the pattern is good, but look at I don't think the volume for a stock like this, the volume should be, I think, a bit higher. I also think that it needs more 9 million EPs to be like really, really good per my rules. I'm actually going to remove it. I know that's probably seems crazy, but that's how I feel. See, I think this is really good. It's like perfect for a high price stock. The same thing with UCO. I think it's really good for an ETF. It's like, look at the 9 million EPs. VAV. This is the right idea. This is the right type of price action. I think it's quite good. And so we can remove these very easily. And so you see, like, I thought they were all good when I was tired. And there's a lot of cognition that goes into it. And there's a lot of self-restraint because you have to be good enough to say, like, it's not perfect, basically, mentally. So look, 1 EP, 9 million. So this is good. It had 2, or it had more than 2. I see 2 on the chart. I see 2 on this chart. I do see 2 on this chart. bit of a while ago. Dawkin, I guess, only has 2. In the last 2 years, it only has 1. So I can remove it. This thing has had 2. Hut has had 1. See, I don't like this rule. God damn it. I don't know if I want to do it. Iron, very good. 2, 2, 0. But look at the volume. At least QMCO had one immediately. If we look at, QUBT had two, and then it went on to frickin' $4 to 8 to 25. Let's look at long-term stuff like ACB, the old stuff. Oh, the volume absolutely won't correct, but what's another one? Neg, maybe? So you see, like, when I struggle with my rules, I, like, go back and check stuff. Yeah, see, Neg never had two. What about Open? Open had a lot, and that was, like, a perfect stock. What the fuck happened to my screen? I hope it hasn't been like that all day. Iron had one before this epic run, but there are two on this chart. They're all over here. There are none here. Why don't we look at IO and Q? Yeah, see, they're all over IO and Q. What about RGTI? Yeah. So it's like, all else equal, you would rather have the one with more. So Hut has one. It's really rare. It's just really rare, There's other stocks. Hut's great, but there were better names. DOCN, I like it a lot, but it's not perfect, so it's okay. Too many TSEM. So again, like for a high price name, it's freaking good, and the problem is the share count. That's the reason it hasn't had as many as we would want. But there's going to be better names, and like when I run out of liquidity, I'll raise the standards, or lower the standards, I mean, but I can remove TSEM. I can technically remove Soxel, but it's an ETF. SNDK had one. Yeah, I mean, it's fair to make an exception for an IPO. So I'll keep SNDK there because it's been an IPO. It doesn't have even the full data, so it's okay. It's good. Not good. Right, so like even when it made its like some really tradable moves, there's two visible on the chart. And usually they're closer to the big moves than further away. Just being honest. Like, look. There's two right there. So I can remove Rocket Lab, I guess. This is very good. Oh my god. Just flashbanged myself. Where were we? Okay. Okay. Lunar has two technically, so I'll keep it on. I will keep this one on. Yep. 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 Yes. See? The best ones have more of them. That's just the reality. Would you rather be trading light or SNDK? I mean, both worked. Probably SNDK though. MU has one. I don't need to be trading it. BW has 2. I'm in the wrong watch. Oh, I'm in the right one. Okay, BW. Yeah, we can remove it. Yeah, okay. So that's like a much more selective watch list. And you see, like, I have to do it over many days because it's cognitively, it's very draining. And if I do it all on one day, I will make mistakes. Basically, it's not internalized enough yet for me to do it in one sitting. You see people like Stockbeat. This is why I don't run the 4% breakout scan because it's so cognitively challenging to be consistent for, say, months. For me, my process needs to be spread out over days with like multiple backstops, basically. So, yeah, that's the process. We've got our watch list. And then I think the Monday thing is like look for SA, look for strong breakouts.